Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, because we didn't get to chat last week, I do want to quickly touch base with you regarding the US dollar. Chart-wise and just your general outlook for the dollar. Look, the dollar broke down last week, below 100 on the dollar index as of right now as we're recording. Dollar's a little up today. It's in the low hundreds, but quite frankly, you look at the charts and this is still under a pretty key support level. So we can say that this dollar breakdown seems to still be hanging in there, which has helped markets. It has helped precious metals. Jordan, in terms of the chart and your outlook for the dollar, what are you seeing here? How important was that breakdown last week?
I think it was pretty important, Corey, looking at, whether you look at a weekly chart or even a monthly chart. Well, on the monthly, it hasn't quite broken down yet. I just pulled that up. I mean, 100 on the monthly chart is pretty significant support right now. I mean, if we go back to the weekly, support for me is around 101. So the dollar's trading at 100. But looking at the monthly chart, I mean, there is some support around 99, 100. So I think if we were to see the dollar, make a nasty monthly close this month or the next month below 99, then you could get a retracement all the way down to 93-ish. So there's definitely, I don't want to say a lot more room, but it's more than some more room. There's plenty of room here for the dollar to continue its decline. I mean, the technicals are definitely, really bad right now. And they're really bad given that you've just had this breakdown on the weekly chart and the potential for a breakdown on the monthly chart. So this decline in the dollar, I mean, this latest decline could just be getting started. And so obviously that's impacting every market right now.
Yeah, Jordan, it's interesting to watch the dollar because so many algo machine trading is based on the US dollar, but it's closely related, and really all currencies are closely related to interest rates. And a lot of people, when we bring them on, flag the dollar as something they're watching. And then another group of people really flag interest rates as something that they're keeping a close eye on. We have seen those pull back a little bit. When you're looking at gold, what do you think is more of the prime mover? Is it the currency or is it the interest rates?
Probably interest rates. I mean, gold, with respect to big moves, gold leads the dollar at turning points. So, I'm not a fan of the, whatever the dollar does, gold is going to do type of analysis, because that historically hasn't always been the case. So with that said, I mean, I think bonds are a much bigger driver because the bond market's the biggest in the world. And so that to me is more interesting. That's going to tell the tale. I mean, if we have the 10-year breaking out here above like 4.1%, that would be really significant. And at the same time, if it were to break below the lows around, say, 325 or 330, that would be really significant. So you've had the 10-year trading in this range here for, it looks to be roughly a year. And either way, breaking out or breaking down out of this range is going to be really significant. And so I'm just thinking the dollar could be possibly front running the fact that the Fed is probably going to be done hiking.
So, Jordan, what does the chart tell you about where interest rates are going then? Because you're right, it's been close to a year here where we've been in this pretty wide range, but you can also make the argument that from the 2020 lows, this is a pretty significant uptrend that is still very much in place. Do you think yields break higher?
It's really hard to say. I think we also have to be aware of the potential for a false breakout or breakdown. I think if yields break higher above, call it 4.1% or 410, if they break above that, you could have a false break where it breaks above it and, immediately comes back down and then comes back down all the way below support, leading into a recession. Although it clearly it doesn't look like that, there's going to be a recession in the next couple months. I'm just thinking ahead here. So right now, I don't have a strong opinion as to whether it's going to break up or down. It's clearly in a range. I mean, gun to my head, I think the bigger break that's eventually coming is probably going to be to the downside. I would think sometime next year.
Well, we will keep tab on the bond market and the interest rate markets just to see how those develop when they finally do make a move one way or the other out of that range. But let's shift over to the precious metals, Jordan. When you look at gold, we haven't talked to you in 2 weeks, but it's had a nice move up. A lot of people are surprised that the metals moved up so sharply. Gold around 1982 at the time of this recording, silver well above 25 when a lot of people were eyeing lower levels. Are there any support or resistance levels you got your eye on now that we've seen a little move higher in the precious metals?
Yeah, for gold, whether you're looking at the daily, weekly, or monthly, it's around 2,000. I mean, on the monthly chart, 2,000 is a significant resistance level. If you're looking at the weekly chart, it'd be 1985 to be specific, but it's really that 1985 to 2000 zone. So gold is going to test that. Silver last week took out 2450. So silver's next level is 26. You can see that on the daily and weekly chart. And, if we get a weekly close above 2000 in gold and above 26 in silver, this could get pretty interesting. And it probably, I think the bias is to the upside because you have the weakness in the dollar that's driving this. I do want to see stronger buying and stronger performance in real terms. Because otherwise, if this is entirely a dollar weakness move, which could have, a lot more room to run, then this move will peter out, once the decline in the dollar peters out. But I think, just focusing on the short term, I think it's the price action and outlook is definitely bullish for gold and silver.
Now, are the stocks telling you anything? Is there any story we can make up here for the stocks? Which, in all fairness, you look at GDX, it bounced. It even put in a little gap at what could be considered at least a short-term key level when it got above that recent high from about 30.77. But look, we're still dealing with very low volumes. I know you don't follow volumes that closely, but in terms of the stocks, what are you taking away from those?
Well, GDX, not quite 2 weeks ago or close to that point, it did have, call it a fledgling positive divergence in the advanced decline line. And, that's always a trusty leading indicator. And the last 4 times that happened, you actually had it at the last 2 lows in GDX. You had it March and then at the October low in 2022, and you had it after COVID and then after the bottom in 2016 or right at that bottom. So it's 4 for 4 in terms of pretty good rallies, and now it looks like it's going to be 5 for 5. So, I mean, that gives me a lot of comfort thinking that the miners are going to continue this move to the upside. Because if you look at the moves off the lows, I mean, I think the weakest one of the previous 4, based on this divergence, was around or close to 40% from the low. And so if you take that figure or a little bit less and take it from the low, GDX, has a chance to potentially run up to 40, I would think. And if you pull up a monthly chart, it's clear that 40 is the next level where you're going to run into some stiff resistance. And, looking at GDXJ, the comparable would be around 47, maybe a little bit higher. But based on the positive divergence in the advanced decline line, obviously the metals are looking better. Dollar is weak. I think you're going to see more buying come into the sector.
Well, Jordan, it does seem a little bit of more of a bullish posture in the markets when you think about silver relating to gold. The gold-silver ratio has improved a little bit, and the mining stocks have improved relative to gold. Any other takeaways if you do any ratios between silver to gold or the mining stocks to gold?
Yeah, I'm more focused on the silver to gold ratio, and looking at that ratio, and if you're using silver divided by gold, is I think coming up close to some trend line resistance. I'm not a huge fan of trend lines, as you know, but nevertheless, looking at that ratio, if there's another leg higher in this move, I think you would see the silver gold ratio. I'm looking at it, it kind of has like a rounded saucer bottom. I mean, there's potential head and shoulders bottom, but if you see that ratio break out, I mean, you could see the ratio fall down to 65 or maybe a little bit lower. I'm just looking at it now. So it's like at about 78. So I think that's a possibility. I mean, if you're going to see the dollar fall down to 93, 94, and given the way things are looking in trading, there is potential for more of a decline in that ratio into the 60s. So I mean, the macro that's driving everything, I mean, that's another story, but just for short term and medium term, it does look like silver has a shot here to really outperform gold potentially.
So Jordan, big picture, are these charts, the precious metals charts and the other charts that we've talked about, is it screaming bull market or positivity for precious metals, or is it still giving almost a mixed bag, almost a range bound type of message to you?
I mean, the reason I'm hesitant is because you clearly have the potential for gold to break above 2,000, 2,100. But at the same time, that could be occurring because of dollar weakness, and, the stock market is, not correcting significantly. So there's that problem, I could say. And at the same time, looking at the silver chart, it does have a setup here where if you get a really strong move above 26, there is a potential measured upside target of around 34, 35. So I don't want to, I mean, you could see those things happening while the stock market is going up, which to me is not really a good long-term sign. But it's hard for me to say, oh, well, we're not in a new real bull market if you have, gold breaking above that level and silver's back at 35. So I'm not trying to play both sides, but what I would say is, potentially, if it's only the dollar that's driving this move and you get silver into the 30s, you get gold above 2,100, at some point, if a recession is looming and a big rebound in the dollar is looming, you could get silver and gold, giving back a large amount of this potential upside move. And I would say in that kind of scenario, it's after that give back would be when the bull market would really, really begin, in my opinion. But, at the same time, as far as a higher low, like, I don't think we're going to break the low that we saw in 2022. Like, I don't see any big move down for the sector. Like, if there's a big move down for precious metals, I don't see it occurring unless it's from much, much higher levels. Like, for example, 24, 2,500 gold, 34 silver. Then at that point, maybe you get the big correction at that point when, the dollar rebounds and the recession hits, because gold and silver did so well leading up to the recession. It's a completely different scenario versus the one where they're not performing well. The stock market's going way up, then a recession hits, then they can start moving based on the Fed cutting immediately into the recession. But if they've already moved ahead of the recession because the market's already discounting the Fed stopping and the Fed cutting, before the market discounts a recession, then they would be susceptible to declining when the recession begins. Then you get that recession decline that everybody talks about, that everybody's waiting for. So I know there's a lot of nuance, and it could be, complicated. I could be talking around in circles, but it's just because it's a great question, but it's just there's many elements to think about.
Fair enough. Well, it's the reason why we stay up to date with you and stay up to date with the charts, right? Because I don't think it's ever that easy to say this is just a straight up bull market and it's going to keep going higher, especially when you have this range that precious metals, gold in particular, is traded in for years now. You're right. We need a breakout. We need some more money coming in and some more momentum for the gold price, but always important to check out some of the other markets that also impact some of these prices. Jordan, thank you as always for your time. We'll chat next week. I hope you have a great rest of your week.